All right, let's get down to more on the consumption space because we've seen that entire pocket rise as well. Abneesh Roy, the Executive Director at Nuvama Institutional Equities, is joining us now to talk more about that. Abneesh, good morning and thanks for joining in. My first question for you is on HUL. Now, I ask because there are many positives that are perhaps expected to play through, the monsoon situation, the rural recovery, and there's a new management at the helm as well. Can you tell us what your outlook is on HUL?
Sure, thanks. We are positive on HUL more from a one-year perspective. We expect in FY24 gross margins to expand for most FMCG company, including HUL. For HUL, of course, the key raw materials will be crude linked, and we are seeing correction there. Yes, HUL has passed on some of that back to customer, but still gross margins will expand. This also means that HUL will have a balanced growth in FY24 because grammage additions are coming back in the lower unit packs. The affordability index is also positive for the customer. So we'll see a healthy balance for HUL in terms of volume, pricing, and overall EBITDA growth. Having said that, we do expect HUL's ad spends to go up, especially in Q1 and possibly in Q2. So from a medium-term perspective, prefer ITC, Godrej Consumer, Britannia, Varun Beverages, and in discretionary space, we like Asian Paints and PVR and Trent. HUL will be more from a one-year perspective. Also, we are seeing premiumization very strongly in the liquids in terms of detergent and face wash, etc. But yes, it's more from a one-year perspective, we like HUL.
All right. Hi, Abneesh. Good morning. Abneesh, on ITC, what's the call? At 200, 300 rupees, there was value 350 rupees, or it's nearly 450. One gets a sense that maybe something's got to give. That long awaited, some corporate action or something could be in the offing. We'll have to wait for that. But what's your call on the stock right now at around 450 rupees, and what's the target price you put out?
So we in fact have one of the highest target price on the street with around 500. Of course, in terms of the weightage within our consumer portfolio, also ITC has one of the highest weightage. Yes, this year, apart from market share gains which legal industry will see, we will see margin expansion in their FMCG business, and in cigarette also they will take calibrated price hike of 2 to 3%. Yes, we wait for the value unlock in hotel business, very likely in FY24. They have been doing the due diligence and all those necessary action for the hotel business value unlock. And in agri and paper also, we do expect that the margin expansion should also happen, especially in the paper business. So we remain positive. The next key monitorable in terms of negative for ITC could be the February 1st budget. But do note that this is an election year. So on February 1st, the union budget may not be a full-fledged budget. That gives more time for the legal industry to have a favorable taxation policy, which will lead to market share gains from the illegal industry, which is still around 22-23% of the industry. So we are positive. Dividend yield is also decent. But overall, I think the stock has done well. But from a one-year perspective, it should still do quite well.
Out of your coverage universe, in terms of absolute returns, Abneesh, if you had to pick one name, what would it be from here out over the next, say, a year, 2 years? Absolute upside.
Right. I think everything has rallied. So we had seen the FMCG index. In fact, around 2-3 quarters back, it was languishing because there was rampant FI selling. The gross margins were under pressure. Both of these are reversing. The rural slowdown also, which was an issue, that also, if you see, we are seeing green shoots emerge there. There is a record grain output also. But then we also do have to see the risk of El Nino. If I put all this together and see the valuation, my sense is from a 1 year, 2 year perspective, Asian Paints and Pidilite look the best because from a raw material perspective, gross margin should expand. And from a growth perspective, also these companies have demonstrated, Asian Paints in particular, that double-digit volume growth and double-digit EBITDA growth is something they can deliver. So from a 1 year, 2 year perspective, Asian Paint gives us high confidence.
Okay, one final question then, Abneesh, before we let you go. What's the outlook on Titan and some of the other retail stocks? I mean, Trent is sitting at a record high as we speak. Avenue Supermarts, how are the valuations looking? So in general, that entire pocket?
So in that pocket, Trent is the best. So the AGM, we released a report, also very strong addition in terms of store, in terms of Zudio, and in their west side also, we are seeing good pickup in stores and overall growth also. So clear market share gains is happening. In terms of Titan, yes, we remain positive. We'll prefer Trent over Titan from a near-term, medium-term perspective. But yes, those two will be our top picks. Currently, QSR still faces the gross margin pressure because of high dairy prices, cheese prices, and high competition. But within that space, Devyani, Sapphire are better. In that space, PVR also is looking interesting. Adipurush, strong initial numbers, very strong pricing also, and we are seeing strong content pipeline. So so Trent and PVR are looking more interesting in the discretionary space.
Missed your call on Avenue Supermarts, DMart. In the last few days, it's coming back to life. Valuation wise, it was very, very expensive. It became a little bit more moderate. What's the call right now on Avenue Supermarts?
So from a medium long-term perspective, great stock, compounding will continue, store addition, X of Maharashtra and Gujarat will remain strong. Last 2 years, because of very high discounting by the e-commerce grocery players, DMart also has seen a lot of pressure. Now, because of the other side, everyone is focusing on profitability. So DMart is also a favorite of the FII. So as FII buying comes in, that stock also should do well. It will not be in our pecking order in terms of the top three, but yes, what it has seen is the margin pressure because of the overall discounting from competition. That should start easing off. So DMart more of a longer term call, but we'll prefer Trend, PVR and Titan in that space over a DMart.
Okay, Abneesh, thanks a lot for that. Have a great day. Thanks for joining in. So we have the pre-opening rates which have settled in. Let's quickly get a handle